Good evening, this is GBPUSD. I'm the essential. You can find at the blog fibstalker.com. You also post regularly on Twitter using the fibstalker nickname. Good evening, this is a video, weekly review of the pound versus US dollar forex pair, the US dollar versus Japanese yen forex pair, and the Australian dollar versus US dollar forex pair. This is what I call fibstalker review on currencies, a brief video in which I'm going to review these three pairs on the weekly chart and on the daily chart. Let's start from the pound versus US dollar. So those who follow me know also that I've been looking at this important weekly level now in place since 2009, and this level, this area can be traced in different ways, but basically there is some resistance coming in the 164 to the 168 area, and as we can see, it has been this area of supply has been respected quite regularly in the last few years. Now recently we had this level of support also identified from the lows of 2009 to the highs of 2009, and this level was initially not respected in 2010, but then price started respecting this area, as we can see, twice in 2011 and at the beginning of 2012. So this important was also tested at the mid of 2012, and it's very important, and this is why it was also very important witnessing this failure into 148.61. So this would suggest that longs have failed here, and this area of supply here is actually pushing price lower into previous lows and even lower, because those set up on the upside have on the those supply area have also a setup that brings price below 135. So let's see what has been happening on the weekly chart in the last few days. What we have here is an area of supply that worked very well the first time it was tested in this 156.10 level, and then price eventually got into this area but was not able last week, thanks to the dollar's strength, to break this 157.92. So at the moment shorts are still in control on the weekly chart in this market. Moving to the daily chart, and I'll adjust a little bit the chart here, we can see that the market is moving lower, and we have an area of support which actually corresponds to the area of support we are witnessing in the euro as well. So if the dollar will resume its weakness, we will have a bounce here and a continuation higher, and we are going to break that area of supply, at least until we get to the larger area of supply, which is above price. In fact, this 153.80 area of support has a target in the 159.32. If price continues lower, then we will need to watch another level of support, but I wouldn't actually trust it, and I will want to see some kind of confirmation before we bounce. Moving to the US dollar versus Japanese yen. Again, this is the daily chart, and I'm going to show you first the weekly chart. It's important to see who we have on the larger time frame, and those who follow me know that in the past I've been using this anchor, and I've been testing this anchor to see whether we would get a retracement. We never got a retracement. February, March, April, and the first time we got a retracement right to the pip, which shows the importance of this level here for program trading, was recently, actually was at the end of Friday, 1 week ago, and we had supported the 93.90 area here. This area of support, as we can see, so participation and as a target above us, well above that area of supply that I'm going to show you in a minute here. And I want to show you we have above current prices at the moment, and as we can see, this area of support and set up higher as a targeting the 108.30 area. We will get there. We don't know this. We have to notice that this price also entered an area of supply, and this area of supply is represented by the trace I'm going to show you here, which is from highs to lows. So the existence of supply in this area, starting from the 99.90 area and going up to the 105.60 area, caused the daily to break, as I'll show you in a minute. So we had this support and we had this area of supply. So we need to see how price will behave within this area. A natural level of resistance will be the level 98.76 to 95, which lines up with this start of larger area of resistance. So actually price could continue higher into this 99.90 and then come back down. Let's look at the daily chart and see what we have there. Actually I want to show first of all how price, just a moment, here we go. So first of all I want to show how the sequence of measure move that we had. At the end of this move there was a traditional, and price hit the first target, was not able to hit the second target. A failure, quick failure, could be identified by tracing the extension, but we had to wait for confirmation that the next traditional would actually fail, and that happened only recently. Price held on June the 6th, and then it failed this level on actually June the 6th. And what we have here, we have a price retracing, and as we said, price could find resistance at this level here, or and at the moment is actually trading the all the way halfway back here. It's very close to that level, so we will use this as our potential area of resistance, but you would need to study the price on the 15 minutes in order to identify failure. And going to the Australian dollar versus the US dollar, the weekly chart shows a market that formates in big trouble. We had this level of support that has been basically working since 2010, and we had always participation at the 95.70 area, clearly in mid 2012. But what happened actually last week, this level was pierced, and this is an important warning signal here, because now this price, the price of the Australian dollar versus US dollar, has the potential to move lower into the 0.8540, and this can happen even if the dollar index continues higher, because even if the dollar index corrects lower, because I want to remind you that the Australian dollar is only a small component, just 9% of the dollar index. So this market can continue going lower as it did when the dollar has been moving higher, even if the dollar moves lower. And the final destination, actually initial destination, is this 0.8540 level. Then the price of the Australian dollar could continue lower as well. An important anchor could be identified here in this market, and has been used by program trading repeated times. This was used. This anchor was used here the first time, and again it was used to identify the the entry point after this larger retracement here. First at 0.9760 we got target in the 94 area, and again this this level was used to model price after the price corrected, and as we can see, the 96.63 traded almost to the pip, bringing price into this 91.65 now. So if price does not continue lower, then there is a potential to for a large correction after we broke that important 61% area, as I showed you in the weekly chart, and price could go back into this 0.9580 area, and this again would be a good sell for the Australian dollar. This is it for the for this review. Again, this is the FibStalker view on currencies. This is only available to my subscriber. If you want to receive this video, just subscribe my free newsletter. You can go to my website, fibstalker.com. On the left side of the home page you'll find an icon to subscribe. Only takes 10 seconds and all the information is for free. Thank you very much for your attention and have a great evening. Bye bye.